The paper felt heavier than it should have. Mark sat at the desk lamp casting a sharp, unforgiving cone of light over the mortgage statement. The red ink of the final total seemed to pulse against the white page, a stark reminder of the budget he had failed to balance for the third month in a row. He traced the numbers with a fingertip, the friction of the paper against his skin grounding him in the reality of the loss. Every digit felt like an anchor, dragging his progress into the dark. He looked away, staring at the empty wall, calculating the sum of what he had already surrendered to interest. The silence in the room was absolute, broken only by the steady, rhythmic hum of the computer fan. He looked back down at a document. The mockery of the red ink hit him again, harder this time. It was not just a bill, it was a cage. He pushed the paper aside, his hand steadying on the desk. Enough! The frustration that had been simmering for weeks suddenly crystallized into a singular, cold clarity. He reached out and pushed the power button on his laptop. The screen flickered to life, bathing the room in a pale, clinical glow. He was done losing. Today, the cycle stopped. The laptop screen illuminated the room with a stark, blue glare. Mark navigated to the credit reporting portal, his fingers moving with a new, mechanical efficiency. He bypassed the dashboard and went straight to the payment history. He scanned the columns, his eyes darting across the rows of green check marks that signified his reliability over the years. Then, he stopped. A single jagged red mark sat in the row for 6 months ago. A late payment. He leaned closer, the pixels sharp against his retinas. He knew he had never missed that date. He clicked the entry, pulling up the detailed breakdown, and his heart rate quickened. The record claimed he had missed the payment by 3 days. He sat back, the chair groaning under his shift in posture. This was not a result of his poor planning. It was an error. The weight of the mortgage statement from before shifted in his mind. The budget was not just failing because of his choices. It was being actively sabotaged by a phantom debt. He tapped the mouse, highlighting the transaction ID, his jaw tightening into a hard line. The sadness of the previous hour evaporated, replaced by a cold, surgical focus. He had a target now, and he was not going to let it stand. Mark did not hesitate. He grabbed his phone, his thumb hovering over the bank's customer service number. The call connected instantly. A sterile, synthesized voice guided him through a maze of automated prompts, each one a minor barrier to his goal. He hit the numbers with precision, his breath even, his focus locked on the objective. When the hold music finally began, a repetitive, tinny loop, he tapped his pen against the desk, in time with the rhythm. He waited, staring at the printout of his automatic payment history on the screen. The representative finally picked up. Mark did not offer apologies or polite small talk. He stated his account number, cited the specific transaction ID, and calmly laid out the facts. "I have the confirmation code for the automatic transfer from 6 months ago," he said, his voice steady. He read the numbers aloud, the data acting as a shield against the representative's initial hesitation. He demanded a formal dispute be opened immediately. The line crackled with static as the agent typed, the silence stretching out like a wire pulled to its snapping point. Finally, the agent confirmed the request. A case number was issued. The error was officially under review. Mark hung up, the phone clicking into silence, and exhaled. The ghost of the late payment had been challenged. The path ahead was clearing. Mark cleared his browser tabs and opened a fresh spreadsheet. 3 windows sat open side by side, each belonging to a different lender. He began keying in numbers, his cursor jumping between cells with rhythmic intent. Interest rates were just the surface, he knew. He focused on the APR, the real cost hidden in the fine print. He highlighted lender A. The interest rate was low, almost tempting, but the $4,000 origination fee stared back at him from the fee schedule. It was a massive, upfront anchor. He moved to lender B. The interest rate was higher, a 0.5% bump that stung to look at, yet the closing costs were zero. He tapped his pen against the desk, his eyes darting between the two columns. The mental strain was physical. He felt the weight of the trade-off pressing against his temples. If he chose the low rate, he would be drained of liquidity. If he chose the zero-cost option, he would pay more over the life of the loan. He adjusted the formulas, watching the totals shift in real time. The tactical pressure of the math was relentless. Every decimal point mattered. He was not just looking at numbers anymore. He was building a wall against his own future debt, one calculation at a time. Mark turned his attention to the debt-to-income ratio, the invisible anchor dragging down his financial profile. He pulled his latest bank records into the spreadsheet, lining up his monthly obligations against his incoming revenue. The numbers were tight, too tight. He isolated a smaller credit card balance, a lingering debt that sat like a weight on his credit utilization. He knew this was the lever he needed to move. He logged into his bank portal, double-checked the available funds, and clicked the button to pay the balance in full. The confirmation screen flashed green. He did not stop there. He navigated to his credit monitoring service and manually triggered a score update. The progress bar crawled across the screen, a thin line of anticipation. Then, the numbers shifted. 15 points. The score ticked upward, a small but decisive victory that instantly altered his standing with potential lenders. He leaned back, the tension in his shoulders easing for the first time that day. This gain was not just a number, it was leverage. He had successfully cleared the path for his next move. The broker would have no reason to deny him now. He had earned his seat at the table. Mark sat in the small, sterile office, the chair feeling firmer than he expected. Across the desk, the broker slid a stack of paper forward, the loan estimate form sitting right on top. Mark did not look at the broker. He looked at the paper. His eyes tracked down the document, scanning the dense columns of figures and bold headers. He breathed slowly, keeping his pulse steady, refusing to be swayed by the broker's professional tone or the casual way the man spoke about interest rates. He was looking for the gaps. He was looking for the hidden weight. His fingers slid down the page, line by line, past the interest rate, past the principal, until he stopped at a section marked Administrative Charges. His eyes narrowed. There, buried in the middle of the second page, sat a line item for a $500 document preparation fee. It was an arbitrary cost, a ghost charge meant to pad the bottom line. He felt the air in the room shift. This was not a mistake. It was a test of his attention. He held his gaze on the figure, the numbers blurring for a second before snapping back into sharp focus. He had found the trap. Mark did not look up. He pressed his index finger firmly against the paper, right over the $500 document preparation fee. The tip of his finger turned white from the pressure. He dragged his hand back an inch, leaving a slight smudge on the crisp document. The office suddenly felt smaller, the air thick with the weight of the unspoken. He looked the broker directly in the eyes, his expression void of any hesitation. "This line," Mark said, his voice level and cutting through the silence. "This $500 fee is unjustified. I am not paying for a service that is part of your basic administrative cost. Remove it, or I walk out that door right now." He held his hand steady on the desk, not moving, not blinking. The broker shifted in his seat, the leather chair creaking loudly in the quiet room. Mark kept his finger pinned to the paper, a physical anchor to his demand. He had spent hours calculating his own worth and his own debt. He was not about to let $500 of padding dismantle his progress. The silence stretched thin, vibrating with the risk of the deal collapsing. Mark waited, his gaze fixed, daring the other man to challenge his resolve. The broker cleared his throat, the sound sharp in the cramped room. He leaned forward, hands open in a gesture of forced reasonableness. That is a standard administrative cost, Mark. It covers the processing time for the title search and the internal audits. Every file incurs that cost. Mark did not move. He did not blink. He kept his finger pressed firmly against a paper, anchoring his position. He watched the broker's eyes dart to the clock on the wall, then back to the document. The broker began to speak again, his voice rising, attempting to fill the vacuum of silence with technical jargon about overhead and policy. Mark let the words wash over him, treating them as noise. He remained a statue of resolve. He knew the math. He knew the padding. He offered no counter-argument, no debate, and no smile. He simply stared at the man across the desk, his jaw set, his breathing slow and rhythmic. The broker's voice faltered, trailing off into an uncomfortable half-sentence, as he realized his explanation was hitting a wall. The power dynamic in the office shifted. The broker looked at the paper, then at Mark's hand, then back to Mark's face. He stopped talking. The silence returned, heavier than before, pressing into the corners of the room. The broker sighed, a sharp, ragged sound that signaled his defeat. He reached into his coat pocket, pulled out a black pen, and hovered it over the document. He did not look up. He pressed the nib hard against the paper, drawing a thick, jagged line through the $500 fee. The ink bled slightly into the grain of the page. He clicked the pen shut and tossed it onto the desk. Mark watched the ink dry for a heartbeat before pulling his own hand away. The barrier was gone. Next, the broker signaled his agreement to wrap the remaining closing costs into the loan balance, eliminating the upfront burden entirely. Mark took the document, his fingers tracing the revised totals. He pulled out his own notebook and verified the math one last time. The interest rate drop was locked at 1%. He divided his monthly obligations by the new rate, comparing the result to his previous ledger. $200. $200 saved every single month from this point forward. The numbers stared back at him, clear and absolute. He had forced the change, navigated the bureaucracy, and secured the outcome he needed. He looked at the broker, who was now typing rapidly at his terminal, and felt the weight of the previous months lift from his shoulders. Mark took the pen from the broker and signed the final page. Each stroke was deliberate, the ink biting into the paper with a finality that echoed in the quiet office. He handed the document back, his heart rate steady. With the paperwork finished, he turned to his laptop one last time. He navigated to his bank portal, typed in the new, lower payment amount, and authorized the automatic transfer. He watched the confirmation screen blink into existence, a digital seal on his new reality. He reached out and pressed the power button. The screen faded to black, and the mechanical hum of the machine died away, leaving the room in near-perfect silence. He leaned back in his chair and exhaled. The tension that had lived in his chest for months began to dissipate, replaced by a quiet, grounded stillness. He stood up, left the desk, and walked out of the office. The cycle of high interest was broken. The math had been mastered, the traps dismantled, and the path forward was finally clear. He stepped out into the air, his mind no longer tethered to the red ink that had once defined his days.